my privilege and honor to have Bank of China at the APPMC 2024 this year. We have Mr. Chengdong Zhang, Chief Dealer of Global Market, Bank of China Hong Kong Limited, deliver a special address. Mr. Chengdong Zhang joined Bank of China Hong Kong Limited in March 2022 as Chief Dealer of Global Market. Mr. Zhang has many years of trading experience in various markets with special expertise in the interest rate market. Prior to joining Bank of China, Mr. Zhang worked in Citibank, and Mr. Zhang holds a bachelor's degree in mathematics from Fudan University. Please welcome Mr. Zhang. Thank you.
It is a great honor for me to be here with all of the experts and distinguished guests to talk about the present and future of the precious metal market. My name is Chengdong from Bank of China Hong Kong. Although Bank of China Hong Kong has been in the precious metal market for a long time, this is the first time for us to be here. When talking about Bank of China Hong Kong, you might think of RMB clearing bank, Hong Kong dollar note issuing bank. Actually, we also have a fairly long history of carrying out gold business. Baosang Bank, part of Bank of China Hong Kong, is a member of CGSE, Chinese Gold and Silver Exchange, and a member of the Standard Gold Bar Group of the CGSE. It is also one of the accredited refineries and occupies a very important position in the Hong Kong and international gold market, which used to be called the Gold Bank in Hong Kong. And nowadays, the structure of the gold market is facing an unprecedented wave of change, such as gold demand patterns, regulatory requirements, the emergence of new players, and various innovations. As one of the active players in the market, I would like to share some of the observations in the precious metal market, especially in the gold market in mainland China and Hong Kong. First of all, the demand of gold products keeps increasing, and the product variety has been constantly diversified, especially to the retail market. The categories of gold products can be classified in physical, gold asset management, gold derivatives, and etc. According to the data released by the China Gold Association, China's gold consumption rose 8.78% year-over-year to 1,089 tons in 2023. Specifically, gold jewelry consumption was 706 tons last year, with an increase of 7.97% year-over-year, while sales of gold coins and bars rose 15.7% to 299.6 tons. Industrial and other gold usage was 83 tons. What's more, the data from the China's Ministry of Commerce showed that during the Lunar New Year holiday period, sales of gold and silver products increased by 24% compared with last year. I'm sure you have heard the stories about China's physical gold buying aunties. Now, young generations start to show great interest as well, especially in gold ETF, paper gold, tokenized gold, and gold jewelry. One of the concerns related to the economic backdrops in 2023 was whether consumers were willing to spend continuously. I believe many of us might have read surveys showing that the savings willingness of local depositors hovered near historical highs. The level of consumers' confidence, growth of the savings, the qualification, as well as the demand in loan business are the important factors to observe. Pandemic may have ended in 2022, but its long shadow impacted everyone's life, especially in the area of consumption and investment behavior. Like what I have just mentioned, people started to alter their investment to gold products. Take China, for example. Lots of Chinese local investors have increased the investment to gold-related products. In 2023, Chinese gold ETFs have attracted 50 billion yuan in inflows. By the end of last year, The total assets under management reached 290 billion yuan. Holdings increased by 10 tons to 61.5 tons, the highest level on record. Meanwhile, as the market is facing higher volatilities with uncertainties, many global investors and sovereign names start to increase the portion of gold in their investment portfolio as well. Secondly, the gold pricing mechanism has been changed. In the old days, the price of gold usually demonstrated an inverse relationship with the US dollar, which usually means a stronger greenback will lead to lower gold prices and vice versa. According to historical trends, the divergence between gold prices and the US dollar is generally in line with this pattern. In the first gold price uptrend cycle from 1971 to 1980, caused by the adjustment of the international financial system, the oil prices, inflationary pressures, and geopolitical risks, the London spot gold price rose from around $37 per ounce to a high of $800 per ounce in 1980, while the US dollar index fell from 120 level at the beginning of 1971 to around 90 in 1980, a decline of about 25%. The second gold price uptrend cycle occurred during the period of 2002 to 2011, driven by factors such as the dot-com bubble, the global financial crisis, and geopolitical risks. The London spot gold price rose from $270 per ounce to $1,900 per ounce, while the US dollar index again fell from 120 level at the beginning of 2002 to the lowest point at 73 in 2011, a decline of about 39%. However, this negative correlation seems to have broken over the past 18 months, when gold prices have been rising despite the US dollar remained relatively range-bounded. This year, the relationship between gold and the US dollar has evolved even further. With gold and the US dollar starting to move in the same direction. There are many reasons behind: geopolitical concerns, fiscal expansion, and the upcoming elections in many countries and regions. However, another important reason is the structure of the market participants has been changed as well. Nowadays, Asian countries have invested in all parts of the value chain in precious metal business, from production to smelting and processing. The efficiency and the transaction volumes have been enhanced. The variety of the participants have been increased, which includes hedge funds, algo and high-frequency trading firms. The direct interaction between retail investors and wholesale markets has been increased. As I have just illustrated, many investors have taken the macro backdrops of uncertainties into consideration because gold retains its special value in times of uncertainties. That is why there is rising demand despite the high interest rate and the stronger dollar index. Thirdly, new technology keeps changing the business model and reduces the compliance risks. Technological innovation plays a vital role here. There is no exception for the whole value chain of gold business. In the downstream of the gold industry chain, enterprises are changing the participation methods of practitioners and consumer habits through innovation. For example, some companies in China have developed the precious metal industry interconnection platform, which has digitalized the entire value chain from raw material design to gold recycling, allowing ordinary consumers to participate in customized gold jewelry design through the online platform, and can easily sell back our physical gold on hand to obtain cash liquidity if needed. Blockchain technology, in particular, promises to provide a more robust, viable, and cost-effective mechanism to facilitate the settlement of gold transactions. It will eliminate settlement risks and help to track gold from gold mines to consumers. It can make the gold market more transparent and efficient, eliminating various risks. Green transformation has become another important long-term development goal for gold mining enterprises in China. Various measures have been taken actively to control dust and noise, utilize waste rock for road construction and underground backfilling to reduce the impact on the ecological environment, and has achieved almost 100% recycling of wastewater at some ore processing plants. The industry has been focusing more on green and sustainable practices. I'm sure with the support and collaboration between SBMA as well as other regional precious metal associations, we can continuously connect and share best practices among the region. Finally, I would like to wish the conference a great success and all of the participants a memorable time in Singapore.